Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So guys, today I'm doing something a little bit different and probably a little narcissistic too, but there is method to my madness. I released a video on December 9th called Waiting for Tesla Stock to Dip? Good luck. Now I didn't really convey my finest point in that perfectly. A lot of people missed it, and that was this. If you believe a stock today is worth less than it will be in the future or it's below its current value, then introducing additional risk by waiting for it to dip below a level you already feel is good value or below what it's going to be worth in the future, to me, it's just crazy. It introduces unnecessary risk. I'm boring, long-term buy and hold investor. Just not for me, but you do you. That was the point of the video, but I also laid out some reasons why, some predictions, and well, a lot of them turn out now to look more like prophecies. So I'm going to run through some clips from that video and react, add some commentary and a bit of an update. The reason that I'm going through these is to show you guys how I was thinking and reasoning, because I was able to infer and deduce things and make predictions about the future that have come to pass. It wasn't an accident. The whole point here is to show you how I was thinking and reasoning, because if you've got your finger on the pulse, if you're willing to go deep enough and understand what's happening with a company, with the surrounding industries, with everything involved, you can get a really clear understanding and give you a huge competitive advantage as an investor. Because if you connect the dots that other people don't, you know more than they do, right? So without further ado, let's dive in. Hey guys, before I forget, WeBull have extended their offer for US residents. If you'd like to help out the channel and get up to 2 free stocks, use the link in the description. Alright, let's get back to it. I've been reading all of your comments, and I've noticed a lot of you guys are saying that you're waiting for the next dip in Tesla's stock price before buying. Well, I don't have a crystal ball, but I do have a brain, and so do you. So let's fire up our neurons together and attempt to deduce the most probable near-term direction of Tesla's stock price. Spoiler alert, it's not down. Now, I can't see into the future. By the end of this video, some of you might disagree with me. This video isn't a claim about what will happen to Tesla's stock price. Anything could happen. I'm just looking at the facts and doing my best to understand the most likely outcome. Tesla has a slew of good news on the horizon. Unless something unforeseen and unexpected occurs, like Elon dropping acid with Joe Rogan, or somebody turning off the simulation. I'm a hard man to catch out, aren't I? Had the caveats in there already, covered my ass just in case something like what has just happened, and it did. It seems improbable that Tesla stock will trend any direction but up. The tailwinds are simply too strong. Let's look at why. Q4 is going to break almost every record ever. Tesla will almost certainly report record production, they did, record deliveries, they did, record revenue, they did, and a record order backlog in Q4 2019. This would be good news. And depending on the timing of the first made-in-China Model 3 deliveries from Gigafactory 3, Tesla is likely to also report record cash, they did, and record profits for the quarter. They came within 15% of a record quarter. This would be good news. The Model Y ramp. The Model Y was revealed in May of 2019 to little fanfare, despite its potential to outsell the Models S, 3, and X combined. Thanks to sharing around 3/4 of its parts with the Model 3, and to how quickly Tesla learn and adapt, the Model Y ramp is eons ahead of schedule. We were originally told to expect Model Y production in late 2020. Since then, Tesla has reported in their Q3 2019 results that the Model Y ramp was ahead of schedule and production was expected to begin by mid-2020. Following that, a rumor leaked that Model Y production would start as early as Q1 2020. Soon after that, a Taiwanese website reported that Tesla suppliers had been told to expedite Model Y parts 6 months earlier than expected, which puts the timing of the Model Y production at Q4 2019 or Q1 2020. This would be good news. Not only was production underway in Q1, deliveries of Model Y happened in Q1 2020, way ahead of schedule, blew everyone away. And in terms of learning and improving, Sandy Munro has recently begun tearing down, doing some streams online. Munro Live is a YouTube channel, check it out, awesome content, tearing down the Model Y, and he's blown away with how much Tesla have learned and improved between Model 3 and Model Y as well. Gigafactory 3 production. Gigafactory 3 was built in record time, from mud pit to commencing trial production in 10 months flat. It's absolutely mind-boggling to see how quick Tesla got shit done in China. And thanks to the drone-flying Tesla fanboys, PS, I love you guys, who've been documenting the entire construction process, we know Tesla's parking lot started filling up weeks ago, and production is ramping steadily. The guys over at the EV Stock Channel estimate Tesla is already producing Model 3s at a rate of over 1,000 per month. Tesla took about 6 months to ramp to the same level of Model 3 production in the US. In China, it's taken 1 month. The made-in-China Model 3s have been seen being loaded onto trucks. This indicates that deliveries will commence soon. This will be good news. Lo and behold, a few weeks after that video went live, the first made in China Model 3 deliveries began, marking 1 year between construction commencing and first deliveries to customers. Mind-blowing. With higher pricing than the equivalent US vehicles, plus much lower labour costs in China, it seems likely that the made in China Model 3s will have very healthy margins once volume production is underway. And don't think that Tesla isn't preparing to ramp Model Y production in Shanghai too. We now know Tesla is well underway in constructing stage 2 of the Gigafactory, which will be producing Model Ys. Will be done by Q4 this year, mark my words. Tesla and China are sleeping together. Let's not beat around the bush. Tesla and China are in the midst of a beautiful romance. The scientifically literate Chinese government really want EVs to succeed, and fast. They've opened doors, expedited processes, made exemptions, and basically done everything within their means to help Tesla. First, Tesla gained approval to solely own and operate their factory in Shanghai, while typically, foreign companies must partner with a local Chinese company. Then, Tesla was offered finance to build Gigafactory 3 at below market rates by a group of local lenders. Then, Tesla received an exemption on sales taxes on their imported vehicles. And finally, Made in China Model 3 was added to a list of EVs recommended for the new energy vehicle subsidies. We got to see more evidence of this during the recent virus outbreak, in which the Chinese government helped Tesla to operate almost continuously throughout the whole process and get back up and running as soon as possible after a brief shutdown. So, yep, it's continued. The Chinese government really wants Tesla to succeed. Analysts waking up. Though not inevitable, there is a trend over time for bearish analysts to abruptly reverse their outlook on Tesla stock. I guess it takes some longer than others to see the writing on the wall. If you really want to get a handle on this, do some Googling and look at what was being said about Apple or Amazon in the 2000s by these same folks. Each time the stock is upgraded, or someone from a big investment bank improves their outlook, it bodes well for Tesla's stock price. With some of their track records, it's questionable whether anyone should be paying attention to them, but that's besides the point. And don't be surprised if we see a few prominent short sellers admitting defeat over the next year or two. I mean, where do I even start? Like, right. Every freaking analyst on planet Earth has upgraded Tesla in the last 4 months. Like, I'm just going to put some footage. I'm going to do a Google search and pop that up over while I'm talking, just to show you. Each one of these segments where it's got a view all is a different analyst upgrading the stock at a different point in time since this video was published. Like, talk about prophetic. Big automakers transitioning to EVs. Transition to electric vehicles or die. That's the choice facing existing automakers. Turning a huge ship around is a slow and painful process. Those with any sense now realise they must go all in on EVs or they're fucked. Problem is, shareholders want their dividends, executives want their bonuses, and few have the courage and vision to do what they know needs to happen. Watch as existing automakers perish or sheepishly announce huge layoffs, reduce dividends, slash sales forecasts, warn of tens of billions of new capital expenditure, and big losses. Each time this happens, it validates Tesla. Just for the record, guys, to clarify, a lot of this occurred before the fallout from this virus. What's happened since is it has accelerated and amplified the stuff that was already coming. You can see this by looking at the different actions taken by different businesses. For example, Tesla was providing and manufacturing for free ventilators and stuff to assist the healthcare system in the US. Meanwhile, Ford and GM were asked to do likewise and charged the US government. Now, that's because they have to. They're not in a situation to be charitable. This just shows the difference between the financial strength and the futures of both of these companies. Since then, Ford and GM have both drawn down like $15-16 billion each in existing credit facilities. Ford's just gone to market. I think it was another couple of $1 billion that they're raising, and up to 10%. Like, they're really in trouble now. So we're seeing this play out more. The virus has accelerated this, but I don't want you to get confused and think that I'm just sort of copping out and going, haha, because, I wouldn't have known this was going to happen. It's just accelerated things. We're still getting a look into the financial health of these companies, or the lack thereof, and we're just having things accelerate. This is like fuel to the fire that was already burning. The Tesla stretch. Because Tesla's vehicles are such great value, truly in a league of their own, a curious thing is happening. Buyers who previously had only ever purchased vehicles on the budget end of the market are stretching themselves $10,000 or even $20,000 further to get into a Tesla. This is deceptively important. Tesla are vacuuming up customers who were thought to be in the sub $30,000 market. This is greatly expanding their potential customer base. Those who think Tesla is a luxury brand only for rich people are in for a shock as smart consumers look at the overall cost of ownership and realize the Model 3 is actually cheaper and far better value than a lot of lower priced gasoline vehicles. We're also seeing this play out. If I recall correctly, in March, Tesla Model 3 was the 6th best selling by number of units sold vehicle in the US in March. right up there with stuff like the Civic and the Accord and the Camry, vehicles that are half or less of the price that the Tesla Model 3 is. But what we're seeing is this car is competing in categories below and above because it's such great value that people are willing to pay more, or people with a larger budget are like, you know what, I don't need to spend that extra $100,000 and add a few more inches, right? The Tesla's going to do the job just fine. It's going to be better for less money, so I'm going with that. As I said at the start of the video, I don't have a crystal ball. Tesla is a very volatile stock. It could do anything. I don't know what the stock will do today, a week from now, or in 10 years, but I am confident that the probability of the stock dropping meaningfully below its current level of around $330 is far, far less than the probability of a bumpy ascent to new heights. It's really funny just on reflection to look back at that, because even after a freaking virus and it still didn't drop below that level. This is the point though, I was seeing it was so undervalued at that point in time. I was confident enough to make that claim. Tesla has dozens of strong tailwinds working in their favour and a sea of good news around the corner with very little in the way of major obstacles. If I'm right, and you're sitting on the sidelines waiting for the stock to drop as it passes 350, it did, 400, it did, 500, it did, what then? Are you going to hold off even longer and keep hoping it drops? Will you bite the bullet and buy it for 20, 30, 50% more than it is today? Or will you simply remain on the sidelines wishing you had a time machine? Alright guys, I just got to point something out. I guarantee almost none of you saw that. I remember I originally posted this video and like one person caught it in the comments. I'm going to rewind and zoom in and pay attention to what I actually embedded in the original video. If you don't believe me, link in the description, go check it out. It was already there. My little caveat. Like I said earlier, you'll very rarely catch me out. Remain on the sidelines wishing you had a time machine. Isn't that fascinating? That's literally what I thought it would take to bring Tesla's stock price below what it was when I posted that video. Was a global catastrophe, which we got, and it still didn't manage to get there. It came very close though. But the reason that I made this video for you guys today is just to look back and see what was I thinking, what was I saying. I was able to gather up all the available evidence, engage my reasoning faculties, deduce a few things, and draw some conclusions and be able to make some predictions that have turned out to be reasonably accurate. This has given me a massive competitive advantage as an investor. When Tesla's stock was in the 300s, I was buying. When Tesla stock was in the low 100s a year ago, I was buying. When Tesla stock is below where I think it's intrinsically valued and I see the market is not realizing what's going on, I'm a buyer. I see it as undervalued, I'm buying. I'm not waiting for the stock to dip. If I've got money and I think in the future Tesla stock is going to be worth more than it is today, I'm buying. Now, I'm not here to tell you guys how to invest. I'm not giving investment advice. In fact, far from it. I'm just trying to share how one investor, one guy is thinking about his investments. This is my reasoning. This is what I'm thinking is going to happen in the future. I'm putting it on the internet and letting it play out. I just wanted to clarify a few things about buying dips, okay? Like, if a stock is far below what I believe its fair value is, that doesn't mean that I'm not going to be purchasing it because I'm not waiting for a dip. It just means that I'm going to do some mental math and look at all of the assets I have and think, okay, what's the projected return? What am I thinking here? You know what? If I get rid of this and then buy this, what's my return looking like? Is that going to be better off? Okay, I'll do that or I won't. And that's exactly what happened. Last year, a year ago, when Tesla was going, 300, 200, and then into the 100s, I liquidated almost the rest of my entire stock portfolio. All I've got left effectively is Amazon, Google, and Tesla now, and that makes up like 98.5% of my entire stock portfolio. That wasn't the case a year ago, but I saw this opportunity. I wasn't waiting for the dip with my money just, wasting away to inflation in a savings account. That's ridiculous. Why would I do that? No, thank you. I don't want to have my money on fire just burning away. No. But what I did have was in assets that I thought had a good chance of growing, but I was aware that, at the end of the day, if there's a greater opportunity, I don't mind. Those can go out the window and I'll invest elsewhere. That's exactly what I did. I still buy stocks when they're undervalued, when I think that they've taken a massive hit, an unreasonable hit. I bought Tesla recently after the fallout from this virus when the stock dropped the same as airlines. What the hell was going on there, guys? Are you freaking serious? Tesla stock dropped 60%. Delta Airlines dropped 70% at the exact same time. Hello. So obviously I bought a ton. It just didn't make any sense, so I loaded up then as well. The point here is not to avoid buying stocks when they're cheap, okay? The point is, waiting for a stock to dip is a really dopey strategy. If you believe that in the future the stock is going to trend up over time, it doesn't matter what it's doing in the short term. If the trend is up over time, why would you introduce unnecessary risk, gambling, selling out of a position, or not entering a position at a great opportunity to buy because you're hopeful? Hope is not a strategy because you're hoping the stock will dip. Just doesn't seem smart to me. Anyway, that's what I think. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. And you can now also become a member of the channel to get some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.